Welcome, fellow crypto enthusiasts, to another exciting episode on Fomomia. I'm thrilled to have you join me on this captivating journey through the intricate world of cryptocurrencies. In today's video, we'll be diving headfirst into some of the most intriguing aspects of the cryptoverse that continue to fuel our curiosity and ignite discussions across the digital realm. Have you ever wondered what drives the value of a single Bitcoin? How does this enigmatic digital currency manage to command the attention of investors, traders, and even governments worldwide? We'll unravel the intricacies behind the determination of Bitcoin's price, exploring the fascinating factors that contribute to its volatility and meteoric rise. From market demand and supply dynamics to macroeconomic influences and technological advancements, we'll shed light on the complex web that weaves this digital gold's value. But that's not all. Our journey takes us further as we delve into the enigma of Satoshi Nakamoto, the elusive creator of Bitcoin. Three intriguing individuals have been suspected to be the mastermind behind the pseudonym. Could one of them be the true Satoshi Nakamoto, or is the identity destined to remain a tantalizing secret? Prepare to be astonished as we unravel the clues, examine their contributions, and attempt to piece together the puzzle of the century. And what exactly are nodes in a blockchain? These fundamental components form the backbone of the decentralized systems we've all come to admire. They play an integral role in maintaining the integrity, security, and consensus of a blockchain network. In this video, we'll embark on an illuminating exploration of nodes, demystifying their functions and shedding light on their significance in the realm of distributed ledgers. So, whether you're a seasoned crypto aficionado or just stepping into the exciting realm of blockchain technology, this video promises to enrich your understanding and ignite your passion for the boundless possibilities that lie ahead. Make sure to subscribe, hit that notification bell, and journey with us through the cryptoverse on Fomomia. Let's embark on this exhilarating adventure together, right here on Fomomia.
Have you ever wondered what affects the price of a coin? How is the value of one of the most famous coins, Bitcoin, actually determined? Let's see. Bitcoin transactions are recorded in a blockchain that shows the transaction history and proves ownership of that unit. Unlike other currencies, Bitcoin is not issued by any government in the world, thus making it the first decentralized currency on the planet. With this in mind, people will ask themselves, what determines the value of one Bitcoin? Well, that's why we are here, to shed some light on the mystery. The first aspect of determining the price is the supply of coins. Bitcoin's supply has been dwindling since its inception. The protocol allows coins to be created at a fixed rate, and the same rate has been created to slow down with time. For example, the supply of coins slowed down by 6.9% in 2016 to 4.4% in 2017, and finally 4% in 2018. The Bitcoin halving events take place every 4 years, and this is where the price is changed. Next, the price can be determined by the cost of production. For Bitcoin, the production cost is the sum of the direct fixed costs for its electricity and infrastructure. In this case, Bitcoin miners are in a competition to solve a math problem, and the first one to do so will be rewarded with freshly minted Bitcoins. The real value of Bitcoin can be estimated by computing the average marginal cost of its production, based on the so-called block reward, electricity price, and the efficiency of the mining features, plus its difficulty. Bitcoin's all-time high price was reached on November 10th, 2021, skyrocketing to $68,789.63. Finally, there's the market demand. Basically, as long as the demand is higher than the supply, the price will keep on climbing. This might sound a bit complicated, but if you do the math properly, there's nothing stopping you from calculating the price of one Bitcoin. Since there are limited numbers of coins on the web, the price will never stay the same. Ever since Bitcoin appeared in the digital world, investors and others involved in the newly rising industry are still looking for the real identity of its creator. Since Bitcoin was created as an idea for decentralized transactions on the internet, there has to be someone behind the curtain. Today, we take a look at 3 people who were supposedly the notorious Satoshi Nakamoto, the mysterious founder of the world's most talked about coin. Dorian Nakamoto was the first person that presumably is the face behind Satoshi. They both have the same last name, but it seems no one other than famous magazine Newsweek actually believes in this theory. The whole media circus raised eyebrows between many, and even Dorian Nakamoto himself denied the whole thing. The next person is Nick Szabo. In early 2008, Nick created BitGold, a precursor of Bitcoin. Besides his product being similar to Bitcoin, he also had an extremely similar writing style to Satoshi. But this is not where the story ends. Both Szabo and Nakamoto have used economist Carl Menger as a reference in their writings and have both also worked for DigiCash. So far, Nick Szabo is the prime suspect in the case. The last person on the list is Craig Wright, an Australian scientist. This theory was pushed forward by Wired magazine. Their primary evidence were White's blog posts about a cryptocurrency paper which happened to be published just before Satoshi's white paper on Bitcoin. However, soon after these claims were questioned and Wired followed up on its report that the blog entries were actually backdated. Many people in the field, among which Ethereum's co-founder Vitalik Buterin, who's usually uninvolved in crypto politics, came out against Craig Wright, publicly calling him a fraud. Who do you think is the real Satoshi Nakamoto? Let us know in the comments below. We've all heard of lymph nodes and plant stem nodes, but what on earth are nodes on a blockchain? It seems half the online world is all scratching their head over this question nowadays. So let's try and resolve it once and for all. Just like lymph nodes and stem nodes, nodes in a blockchain are also connected to each other and constantly exchange information. A blockchain is made of blocks of data that are connected to each other in a chain. These blocks are stored on nodes, which resemble small servers. The blockchain nodes contain a copy of the distributed ledger and are responsible for the reliability of the stored data. But what is a ledger anyway? A ledger in cryptos is a database designed to record transactions and track assets. The nodes have a copy of the ledger and maintain the reliability and safety of the data that is stored. So, in what way do nodes on a blockchain maintain security? To start with, any new blocks on the chain are always stored linearly and chronologically, which means they are always, with no exception, added to the end of the blockchain. After a new block is added to the blockchain, it is almost impossible to go back and change the contents of the block. The only way to do this is if the majority of the network has maintained consensus. Each singular block contains a hash code, which is unique for that particular block. Each block also contains the hash code of the block before it on the blockchain as well as the timestamp. An algorithm creates the hash codes by turning information into a string of code. If the information is modified in any way, the hash code will change too. So if a hacker would run a node on a block network and tried to modify a blockchain and steal some cryptocurrency from everyone else, he would need to modify their own single copy, which would no longer align with everyone else's copy. When all the other nodes check each other's copies, they would immediately see that one of them stands out and the hacker's version of the block would be marked illegitimate. To succeed, the hacker needs to simultaneously control and modify more than 51% of the copies of the blockchain, which is impossible as it requires a huge amount of money and resources. Bitcoin and other blockchains have been built in a way that taking part in the network has a far bigger incentive than attacking it. Thanks for watching. Don't forget to subscribe and to turn on notifications so that you don't miss any new videos. Also, check out Fomomia's channel for more lists and crypto-related content.